Good morning, everyone. Nice to see everyone here early at the start of the conference. As usual, we have a packed day. As Nicholas said, my name is Christa Volpicelli, based here in New York, where I run our maritime investment banking business and have been with Citi for 20 years and enjoy seeing all of you at these conferences every year. On behalf of Citigroup and our global shipping team, our chairman, Michael Parker, is here today, as well as many other colleagues. We're very pleased to welcome you to this event. I believe it's the 17th International Shipping Forum here in New York. And it's a great partnership that Citi has had with Capital Link over a number of years, in parallel with all of the panels and discussions that are running today. Our investor team is working in conjunction with Capital Link's team to facilitate one-on-one investor meetings for many of the public companies who are here today participating. So I know many of you are on those schedules, and if you're not, we do have a desk out front if you'd like to try to get on some of those. A year ago, I started off this conference at the same time. But at a time where we were living through a lot of market volatility in the first 3 months of 2022. We were witnessing a severe pullback in growth-oriented equities, uncertain interest rates, and the start of the Russia-Ukraine conflict, which persists today. We had a sense that the 2022 backdrop for raising capital would be softer than the record years of 2021. But no one really predicted how quick and dramatic the decline would be. In 2022, interest rates rose at the fastest pace in nearly 40 years, as central banks around the world raised their policy rates to curb record high inflation. Equity capital markets, therefore, saw a very steep drop in terms of issuance volumes year over year versus 2021. In the US, we saw IPO volumes down over 90% and regular way follow-on issuance down about 70%. The markets, of course, ended 2022 down between 20 and 30%, depending on the index. Shipping companies, however, and especially those focused on energy, tankers, gas, fared extremely well and outperformed the market, a trend which does continue as we have started 2023. So as we are now almost 3 months into 2023, as Nicholas said, the start of spring, which we all welcome here, we remain in a backdrop of uncertainty, and recent unexpected events have reinforced this. Of course, basketball fans may be talking about the upset in the NCAA tournament this past weekend when one of our local suburban teams in New Jersey, Fairleigh Dickinson, which was the last seed, displaced Purdue, the number one. So that certainly was unexpected. But financial investors started the year focused on questions such as when will rates peak, when will inflation be in check, and debating if the world was headed into a severe recession or a soft landing. Over the last 4 to 6 weeks, new issue markets have begun to function more normally. One of our first presentations of the day will be on the equity market backdrop with one of our colleagues. Although the most recent disruption has been the failure in some of the smaller banks in the US. But here, market participants have been quick to react. The S&P ended up last week, supported by actions of the Fed, the FDIC, and actually Citi and 9 other banks stepping in a coordinated contribution of $30 billion of uninsured deposits to one of the smaller banks. The example of the larger banks stepping in has some interesting parallels in shipping to the divide that exists increasingly with stronger balance sheets, larger companies, the liquidity and financial flexibility that comes from scale and the consolidation that we have seen. So in the face of all of this, the shipping industry continues to evolve and continues to serve as a vital aspect of the global economy. And it's really an interesting time to think about investing in the sector in terms of what many of the companies and their platforms offer to investors today. The continued strong backdrop in energy-related shipping has led to strong cash generation, which management teams are deploying in numerous ways, many offering very strong dividend payouts while still retaining cash for future investment. Order books, of course, in tankers and dry bulk remain very low versus historical standards, supporting a medium-term outlook, which is quite strong as well. In some of the sectors, such as container ships and LNG, where larger order books do exist, much of this is for repositioning the fleets for the required next generation of more efficient assets. And the entire industry is focused on energy transition and the right way to do that within different sectors and business models. And this is a topic which no one has the answer to, will continue to evolve, and I know many of the panels and speakers will be focused on this today. So as the first quarter of this year comes to a close, this is always a timely conference to come together, revisit where we've been so far, but importantly hear from CEOs, CFOs, finance professionals, legal teams, other consultants about where this industry is headed, where the focus is for 2023. It's a great time to be an investor looking at this space. So thank you once again to Nick and to the whole Capital Link team for providing this forum for everyone. Thank you to the Citi Corporate Access team who have arranged these investor one-on-ones. And thank you to all of you who are here to listen. It proves to be a great day, and we look forward to catching up in the hallways and some of the receptions. So thank you, and I think we have Scott up next.